event. So I said, sure, fine. Well, what is CEO Leadership Forum? It is essentially groups of strategic advisors. We call it the Dream Team. So you see all these monikers here. This is the second group in Orlando. We have a first group. It's a total of 20 companies so far, expanding statewide, right, into each major market. Ultimately, we'll be going north to Georgia and out to Texas and all these other places. So why does it exist? To deliver very intense CEO or C-level executive workshops, boot camps on college campuses. Why college campuses? Specifically because we want to connect you to the future hires here. I come out of the clothing business. I grew up in a sweatshop in New York. Okay, I call it a warehouse experience. We want to have folks, who are students, sophomore, junior, senior year, experiencing that warehouse experience early, so that when they come out of school, they're worth something to you. Okay, because the very challenge is, many of the students that come out of school need to be employed by a big company and trained before you can hire them, right? That's typically the challenge, right? So for us, we want to connect you early. So we actually have a very organized program which is growing with Valencia College, school of 70,000 students, all right, and various other colleges around the state to bring them into the classroom, right? So if we were at Valencia College, you'd have about 6 or 7 of them sitting with you, all right? And then ultimately, through the diagnostics that we do, some of you actually did a value driver assessment with Miriam, who is actually an intern. She's a college senior, right? But the point being is that from this, we leave this event, okay, and we typically would do a post-mortem with a team of 3. This is all no cost to you. It's an educational transition of what's happening in the classroom. Oh, thank you. Oh, sorry. And at the end of the day, we identify gaps in your operation, gaps in your personnel, help you fill it. Part of what we're going to be talking about today are those value drivers and what drives valuation of your businesses. Some of you actually apply to have a business valuation done, okay? And I see a few. All right, we're going to be submitting that to you during the next week. It'll be sent to you. We may have a group of us have a Skype conference or something so we can communicate what's on the 32-page report. Okay, it's not something that you just say, oh, geez, that's my valuation multiple. No, it's not. It's not just that. All right. So if you want to have that and you haven't signed up, then on that sign-in sheet there's a check mark where you can say, yes, I want one. It's a $1,500 value that you pay $75 for. Okay, that's what we're doing as a part of this whole thing. All right, so I encourage you, if you haven't done one, this is something that we'll be happy to do. All right, we have an agenda today, and this agenda is action-packed, and it's got some very smart people that you're going to be talking to. All right, first thing here, we're going to actually have a quick icebreaker so we get to know each other, and then we're going to have, for about 80 minutes, something that Russell Slappy of In Perspective CFO Services, myself, and Nicole McMurray from Apple One are going to move you through, okay? It's a whole thing on value drivers and valuation. Then we're going to have a break. Now, these times are off because we started 15 minutes late. We're going to be leaving here at 12:15, okay? Then next, after the break, we have Jed Grennan, Jeremy Sloan, and Chris Bordner. This is going to be, what is the tax law, new tax law's ramifications on your growth going forward? How many people have heard anything about new tax law? Do you understand it? Okay, well, hopefully we will get some important points that you could take back with you. Then the last segment here is going to be the good, the bad, and the ugly of dealing with risk, okay? Jeremy Sloan's got some war stories on companies that he's dealt with, and Chris Bordner from Synergy Wealth will be dealing with him as well on that. So, who are the business owners or let's see, the business owners, C-level executives that are in this room. Can you raise your hand? Okay, beautiful. All right, so what we're going to do here, I'm going to break my neck. What we're going to do here is I'd like to take literally 10 minutes, okay? We all pair off, and you're going to get 3 pieces of information. Steve, you're going to interview Wayne. Basically, you're going to say, okay, Wayne, your name, your title, okay, and what you do, just in one sentence, and then what's something unique that nobody knows about you, okay? Now, I know nobody knows each other in this room, or actually some do, all right, but pull it out of the hat, okay? Something that's fun, because that's the whole deal here is we're going to be spending 3 hours together. By golly, I want to know something that's unique about you by the time we leave, okay? All right, so we're going to start here. Take literally 3 minutes to do this. We're going to have to go quick, all right? So you got 3 minutes. Ready to start? Pair off. Okay? Here we go. All right. Yes, I forgot. So as long as Jet, I think will need it. All right, so you're going to need.
Speaker is, please use this microphone
For
whoever the secondary person is going to be speaking.
oh, got it.
Yeah.
Got it.
How do you tell this is on? How do you tell it's on?
No, it's on. It's on. It just goes dark. Okay. So it's but yeah, it's on.
So if the orange is on, it's on.
Yeah.
If the orange is on, it's on.
Oh, this year?
If it turns off, hit that button.
Oh.
Yeah.
Oh, what, the red one?
Yeah.
Got it.
Just so they can get the audio better.
Got it. You know what? Did you sign in? There you go, Jay, right there. There you go. Okay. And if you do want a valuation thing, you can just say yes, and then we'll grant your info later. Yes. Okay, we ready? This is a quick speed date, okay? All right, Mike, you and Jesse, you do the model, okay? All right, go ahead. Stand up, everybody stand up.
The person I interviewed was Jesse Pettis. He's the regional manager of Integra Retirement Systems. They outsource and mitigate risk for retirement plans and provide those services to employers. The most interesting thing about Jesse that he wanted to make sure that everyone knew is that he is the youngest of 7 kids, and he's an avid guitar player. And the other little piece is the reason there's 7 kids is his dad was in the Navy, so he'd come home and he'd deploy. So evidently 7 times. So that's where we get.
There you go. Yeah. This is Michael Valdez. He's a financial planner advisor based in the Tampa Bay area. What Mike would like you to know about him, he is a very good tango dancer. Does that a couple times a week. And I believe he's given lessons this afternoon around 2 o'clock. What am I missing?
That's it. Good deal. Okay, how about you?
I interviewed John Niederhood with the Brevard Achievement Center. They work on the placement of disabled persons in the community, and he was a 30-year Air Force Master Sergeant Chief.
Wow.
And they didn't want to let him go, but he had to go.
Okay. All right. So we got to do the 3-way.
Yep, got it.
So this is Mike Cray. He runs Applied Global Technology, which is an audio
basically they do IT support, managed services, structured cabling, veteran Air Force. Something unique about he rides to Sturgis every year just to get away from the world.
Go for it.
All right. LeVar Lawrence, he actually works for Com1 Technologies too. He's my executive assistant, so we kind of got paired up that way.
Wow.
But a little bit about LeVar. He's from Chicago, moved down to Dallas. He worked in the HVAC before coming over to Com Home, and now he's pretty much keeping me in line and running the show over there.
Good deal. Great stuff. All right.
How's it going? I'm Dave O'Brien, and this is Sherry Scott. She works for Specialty Government Services, and she actually does staffing for the DoD. She finds doctors and nurses, real talented people that'll fix up people that are injured there. And let's see, what's fun or interesting about her? She's actually in the Hall of Fame for her high school, for power forward, I think, right? So, I mean, in basketball.
Oh, cool.
Yeah.
Great stuff. Sure.
Good morning, I'm Sherry Scott, and I had the pleasure of interviewing David O'Brien with Serve Tech Solutions, which is a surveying and mapping company. And what is interesting about him is he was on a trip to Canada with his wife at one point, and he was detained and said he was on the top 10 most wanted. Same name, same birth date, everything. So we got to make sure we keep an eye on him.
That's great. Great stuff. All right, Jason.
How you doing? I'm Jason Turoff. This is Jay Sherman. He is with Summit Technologies. They focus on weapons technology. He is also a veteran with the Navy. Flew fighter jets for over 20 years.
Wow.
And it's one of the interesting things about him. The other is that he's completed 5 Ironman.
Wow.
Wow.
That was before I was old and fat.
F4s, F14s, F15s?
Actually, I flew A6s.
Oh, okay.
F-18s a little bit.
Terrific. Okay, you're going to...
So this is Jeff, and I didn't memorize Jeff Turoff, and he does specialty government services, and he's the owner and I guess the president of the company. And they do, as we've heard already, staffing of doctors and medical professionals to DoD, and interesting business. They had a huge year in 17 and $64 million worth of revenue.
Incredible.
Good job, you guys.
I'm sorry?
Good job.
Yeah,
And
from
Jay,
from
you
what,
worked
though?
your Ironman.
He started in 2015.
Yeah.
And a thing that people would know about him is he's addicted to soccer, or as they say, football in Europe, and he plays 3 days a week, nights a week, I guess.
Yeah, it's a good habit to have. All
Good
right.
morning. This is Prasen Basavara. Did I say it right?
That's correct.
He is the president of his company. His company has been open for 24 years. They do cybersecurity, risk assessment for the government, and they give software solutions for the government. He is from a beautiful area in India called Gujarat.
Okay. Terrific.
Yes, hi, good morning. I had a very interesting conversation with Indy. It's a short name for Indira. She was born when my prime minister, when I was in India, was assassinated. And she fell in love with the country and she named herself as Indira, and short, Indy.
Excellent.
Her company, CCI Group, she's the president, and she does translation and interpretation services in 70 languages.
70.
Not personally.
No, but what's the recruiting process like, right?
Which will be awesome.
Wow. Oh, my God. Fantastic. Great service. Super. Thank you. Okay.
I'm Steve Goldsby. This is Wayne Leland. He's a partner with In Perspective. They provide CFO consulting services. Something unique about Wayne is he is Russell Slappy's pain in the ass.
That's right.
And has been for 17 years.
Good.
I'm striving here. I didn't know he was going to go with that one.
It's all right. Russell's a pain in the ass to everybody else.
Thank you for that. Sitting next to me is Steve Goldsby. He's the CEO of Integrated Computer Solutions. They do IT solutions for the government, does data centers or enterprise-wide basis for the government and other software solutions that they provide. Something unique about Steve is that he brews beer. Something unique
Cool.
about me that wasn't mentioned before, Steve just become my new best friend.
There you go. Well, actually, what makes Russell Slabby such a pain in the ass is because when he's supposed to be a left brain CPA, he's very much right brain. Okay, and so when I first moved here from Houston, actually I moved back here from Houston. I got reconnected, and he was the guy that folks pointed to. So great operation. We are very close friends and alliance partners, and we're doing this together to help all of you. So anyway, how many people got a phone call or actually filled out a little assessment here this morning? Okay, it was a value drive assessment. I know Steve did. Okay, and Richie, and I know Jason, you got interviewed by Miriam. Okay, so those who didn't, I've got a little 12-question assessment, but essentially they look at all of these areas from the strategic dealing with potential exit to certain areas like cash flow, business value, personal assets, growing and protecting value, your management team, taxes, operations, and financial controls. 12 questions, those 12 points. Essentially, what we typically do is prior to an event like this is we will interview and we'll give the weighted average of everybody, all right, so that we can tweak our comments accordingly. And then what we do afterwards is we follow up with a group visit. All right. Next thing, Russell's going to take the next 20 some odd minutes and walk us through a piece on valuation, and then I'll take over and with Nicole and talk about value drivers, and then we'll have an interactive breakout exercise, which I know will be a lot of fun. Russell.
Hey guys and gals, thanks for attending this morning. What I want to do here is we're going to some of these slides I'm going to go through pretty quick, but we're going to have a breakout session at the end of this, and it'll become kind of self-evident what we're trying to do here. But the importance of identifying value in your business, kind of want to begin with the end in mind, right? We're all trying to build businesses. Most entrepreneurs, you're hoping you get to a payday at the end of all this effort and suffering to build a business and deal with all the headaches of owning a business. So it's kind of the beginning point in the planning process, right? We need to think about what is our valuation, what are we shooting for at the end, and work backwards, really, There's other reasons you want to think about identifying value. You want to quantify the retirement and other personal funding needed. In other words, what do you want when you retire? How much do you need to live at the same standard of lifestyle as you are today? Estate and tax planning, you always want to have a valuation associated with that. You can't do the planning without knowing what the company's worth or what you might have when you exit. It's kind of hard to do the planning when you don't have the numbers, Buy-sell agreements with partners, insurance related to that. You can't figure out what to fund if you don't understand the valuation of the business and the total value to insure. Insurance planning. How much do we need to cover the value of the business, the assets we have? If you're an asset-intense business, lately I've been working on compensation strategies with high-level salespeople, deferred compensation arrangements. There, you need a business valuation done as well. So you can figure out how, if you're going to give this guy 3 points over 3 years, what is that valuation? So you can build a deferred compensation strategy. Stock option plans work very similar to that. You want to know what you're giving away. If you don't have a company valuation, how do you know what you're incenting somebody? So all those reasons, why identifying value is important. So a show of hands, and in America today, it is the way it is. Is the value of your business your number one asset if you look at your kind of portfolio? Yes. All right, good. And typically the answer is yes. We don't all have a bunch of cash laying around. We do have usually some money in our retirement accounts and, of course, our house, typically. But when you look at your overall portfolio, usually the business valuation, the business itself is probably your number one asset as an entrepreneur, depending on whether you started it yourself or you bought it, of course, from somebody along the path. This is just a glossary term slide. You can read it, but kind of what we're going to focus on today is the company-specific risk. The risk unique to a company, generally within the owner's control. Keep that in mind. Generally within your control. What can you affect? Let's kind of, Indy, since I met a couple of you over here, what's a unique risk in your business? So let me give you an example. So, and I know that Wayne does a lot of defense contractors and works with them on the outsourced CFO role here in Orlando, and it's kind of his forte. But I know a big one with defense contractors is having typically just a few contracts. You know, as you, in the defense contracting world, a lot of times you kind of get stuck with only having, you know, we got going, and then all of a sudden we got a $20 million contract, and you have a limited, what we call customer diversification. We don't have a big customer diversification. We really have one contract or 2 or 3 contracts. That's a big risk in the defense contracting world. What's a risk in your business like that? If I'm a buyer, what's going to maybe turn me off a little bit, or am I going to be worried about if I were to buy your business?
That what we do is based primarily on manpower.
Okay.
So if you need, for example, 20 different languages for some projects, you know, we basically are at the expense of those people that we're bringing.
Gotcha. So that's the challenge if I'm a buyer looking at your business, right? Steve, right? Was it? Steve, what about you? What's a unique risk in your business? If I want to buy your business, what am I going to see as a risky, you know, trait of your business, if you will?
We've kind of overcome the diversification.
Good. That's a big one.
Contracts. I guess the big one for us is a lot of what we do is quickly becoming commoditized.
Hmm?
So we're having to pivot to more innovation and leading edge type of services. So we're having to go through a pivot because the market changed around us pretty quickly.
So the value of the services as it becomes a commodity, the valuation from an outside buyer's perspective is kind of dropping a little. Because they're going, there's a ton of people that do what you do, you know, how you diversify yourself from the competition.
They
Yeah.
can build it cheaper than they can.
Right, right. And that's a good couple examples of a company-specific risk. That's good. So what is the process of identifying value? There's benchmarking. You can, you know, how do you go about trying to figure out what your company's worth? There's peer group data out there, market data. Profit Sense is a piece of software at InPerspective. A lot of times we'll load client financials into. It does a comparison to the industry and what are your metrics and ratios, your AR turnover, stuff like that compared to other industry companies. A lot of times you get into the recasting of financials to normalize EBITDA. A lot of times in companies, owners tend to run certain expenses through their books. And shouldn't, but they do. So we have to back those back out. You know, company cars, fully paid health care for the owners, family members that work there that don't do anything. Found one of those the other day on one of my clients where, you know, we were going through and allocating payroll between SG&A and sales, and, you know, who's this guy named Bob whatever? Ends up being the uncle that doesn't work there. You know, so the guy's on salary. So that's an example of normalizing the EBITDA. You got to add that back because a buyer wouldn't, you know, of course, pay that person on payroll. So you see it. You see a lot of things when you go through people's financial statements. You know, having another thing is looking forward. You know, what's our projection for I spent my entire day yesterday doing a projection for a client of the 2018 and 2019 P&L in detail for a private equity group. So they want to look at it because they're actually looking at possibly investing in that client, and they want to see what our projection is going forward. So that's a good example of, you know, setting a realistic set of projections. Business assessment, having a group like us, and actually, you know, CEO leadership forums, part of why we were brought together is we want to help clients understand their issues and challenges and business risks. And so a lot of what we do is we'll go out and do assessments of some of the organizations coming to these, you know, meetings and whatnot, and that's kind of what Jeffrey was referring to. We'll go out and do an assessment from the CFO's point of view, the CPA firm's point of view, the lawyer's point of view, and come out and help identify those things that need to either be pushed to build value and you know, extrapolate, and then also identify those risks that you have in your company that need to be worked on. And then, once again, there's a range of values, looking at companies that have been sold in your industry, similar companies to you, etc. Now, yeah, sure. Yeah, sure.
My notion, based on some experience, and my guess, more broadly, is a lot of these transactions are private transactions.
Sure.
So it seems to me to be pretty difficult to, where is that database of comparable company transactions?
There is a database, actually, and unbeknownst to me, I found one as the world kind of continues to grow database-wise, right? We're all working on our own personal database. There's actually, for instance, Bank of America, Merrill Lynch, and U.S. Trust, they have a whole platform of a private platform when you go to sell your business, and I forget what they call it. It's, I forget the name of it, but basically you can go on that platform, and then they locate somebody that's actually sold company, an investment bank that's actually sold companies like yours. And for like, say they'll go out there and you'll say, look, I want to sell my company. We'll go help you for free locate an investment bank that's actually sold your similar company 10 times. And then in that, they've already dealt with 10 other companies like yours.
So they try to get as close to apples to apples.
Yeah, so there are ways to identify similar businesses, and so they're databases. There's a lot of, information's powerful these days, so it is out there. So, yeah. That's one example I came across this month. Yeah.
Lots of investment banks have these softwares that track all the private transactions that have occurred the past year or 2, 3 in various industries. Now, that's not a cheap thing. It's $25,000 to $40,000 for that software here. So those companies that are equipped to do that, and we work with a lot of them.
Right. So you got to be, for them, that's very powerful. So if you come to them as a potential client and they want to help you get sold, they're going to say, I have access to this database that you wouldn't want to pay for, number one. So it's good. So the value worlds, there's lots of ways to value the company. Part of this valuation tool that we bought so companies could use it even shows you that. There's asset value, fair market value, et cetera, and so on. And I'm not want to get into all the methods, but what I really want to do, we want to focus on really the intrinsic value. That's what does your company really trade for between an open buyer and seller? Go ahead.
I have a question on the valuation.
Sure.
If you are a service company where you don't have a lot of assets,
Mm-hmm.
does it affect the valuation?
Well, yes and no. I mean, we're a service company, right? So there's a going value for a company like ours. And actually, we had struggled, the hell is it, right? Where do I find, similar question, where do I find it? So I went to a conference last year of owners like me all over the country. And we found out what the value was. It's 8.8% of gross revenue. Like CPA firms are a lot of times 1 times revenue. So there are ways to find that out. So it's just, getting access to the right information, right people with the knowledge.
So
Yes.
say
Oh, I'm sorry.
0.8%
Of gross revenue. That's what we would sell for right now.
less than 1% of gross revenue?
No, 80% of gross. Yeah. That would be a bummer. Yeah. Don't. Let's not go there. It's already 80 instead of 1.5. So I don't want to go down. I want to go up, and that's part of what we're talking about today. So this is the easy one. Example A. EBITDA grows to $1 million. Owner runs the business, systems and process to create growth. There's no management team in place. Sales are generated by the owner. Owner is both the CEO and CFO, which we do see from time to time. Or would you rather buy a company B? EBITDA is the same, grows to $1 million. Management team runs the business, systems and processes. Management team creates efficiencies within the business. Owner is on vacation at least a month or 2 a year. Which business would you buy? It's a pretty easy answer, right? That's the point of this kind of conversation. You've got to get things in place and start to look at it from the buyer's perspective, not your perspective. That's the challenge. Yeah.
Like a pro forma EBITDA gets considered, like you're going to get acquired by another company and they say, well, I don't need the owner, I don't need the accountant and the marketing person and the HR. Is that factored into the valuation, or is it more what you look like today and those are benefits?
Well, you're talking more like a strategic buyer looks at that, right? and I've done that as a CFO, we go buy another company, and of course one of the things is, hey, we're going to knock out their accounting department. We can use our accounting department, maybe add 1 or 2 people, get rid of their 6, you know. So that's more the strategic buyer looking at that, not you internally of how they're going to look at it. You got to just sell what you have, right? My EBIT is X. I got to do my owner add backs because that's not normal P&L expenses, if you will. For instance, like if you're running 2 of your cars through the business, that's not a normal business expense. You know, for like a public company would have, that would not be allowed. You know, as an example. Yeah, your boat all of a sudden, your hangar. I've seen it all. Trust me. So yeah, seen it all. Kids, you know, everything. So, all right. So business risk assessment. There's external factors affecting your valuation, market factors like industry trends, interest rates in the market, how are the interest rates going. But the ones we can affect, the internal factors, right? Planning. Do we do strategic planning with our team? I'll tell you this, private equity group, they want my 18 and 19 projections. They want to see your plan of attack. They want our product release roadmap coming up. For instance. So it is important, and people don't realize we don't have a budget, we don't have a forecast. Well, what happens if a buyer shows up and says, where's your product release roadmap? Where's your projections? You know, and what they're going to do, by the way, is they're going to watch to see if we hit our projections during this quarter before they agree to an amount. That's exactly what they're going to do. Senior management team, you know, do we have a senior management team? Are they participating? Are they held accountable? You know, can they run the business without the owner? You know, those types of things. Sales and marketing. Do we have a customer concentration we talked about? Do we have a sales process? Do we have metrics? Do we have goals? Human resources. Do we have a culture somebody would want to buy, not one we created that we love and nobody else does, you know? And this gets into some basic operations, you know. Internal control, well, more processes and procedures on the operation side. Do we have a manufacturing process, that a production floor plan that people are following? You know, do we have you know, standard operating procedures? Finance and legal, you know, are we auditable? Do we have audited financials? Are we doing accrued financial statements versus cash? Do we have internal controls and KPIs, key performance indicators we're tracking and measuring? Those are all things that we can affect as owners, is the point of this conversation, to affect our valuation. Now, I apologize, I'm getting blinder than I used to be, so I have to keep looking at the small print here. Once we kind of, what do we want to do to protect value once we're there, right? How do we do it? You know, how do we protect the value? Do we have a written business continuity plan? Do we know what's going to happen if we leave, if we pass away tomorrow? You know, does the company know what's going to happen if the owner's not around any longer? Buy-sell agreements updated and funded. Do we have those in place? Have we considered that? Do we have employee contracts in place, non-competes in place with our high-level employees? Do we have life insurance? You know, the benefit of the owner's family. You know, I just did a husband and wife deal where they're getting divorced, and of course you get into, you know, I want a life insurance policy on you, and you need one on me, and the company's going to own it, and you know, what if you're gone because I want to keep the company's value for the ex-wife that's leaving. So those things tend to come up in divorce, but really you should have all that in place regardless. What if you get hit by a bus tomorrow? You know, unfortunately, those are things we don't always think about. Business interruption. You know, I'm sure there's a couple companies on the side of I-4 here that weren't too happy that I-4 went down. You know, that big I-4 Ultimate project's probably not making everybody happy when they lose their property on the side of the road. You know, so those are things you don't think about all the time. I said the employee agreements, like the non-competes, that's a big one in our industry. You know, if somebody, we were talking about that last year, that conference I went to, you know, some of the owners, they got offers, and the first question comes up in a service business like ours is, do you have your non-competes with all your employees? And some of them weren't ready. They had to go back and sell their employees on signing all these non-competes, and that's quite the challenge once they've already been working for you, and you're going to end up giving everybody a bonus to sign that document if you didn't do it in the beginning, because they're going to say, what's in it for me, right? So, and addressing other high-risk issues. So, now, I want to get into the math of this, but you know, a lot of times, this is an example of how you do evaluation, if you will, how it's calculated. And a lot of times you'll see the basics of you'll hear people kick around, hey, in your industry, just like you had mentioned, in our industry, you know, 80% of revenue is kind of the standard, gross revenue, instead of looking at EBITDA, okay? A lot of times you'll hear it's EBITDA times a multiple. And EBITDA is earnings before interest, taxes, and amortization. That's your free cash flow is basically what that represents. And typically the valuation is something like EBITDA times 4, EBITDA times 7. That's what this is getting into, okay? Now, go ahead. Yeah, go ahead. That'd be cool. Yeah, it'd be the slide girl. So what this shows you, just in simple, and I don't want to get into the math, but if you could affect 10% of the company-specific risk, you can increase the valuation by a huge margin just by moving that needle 10%. Okay, it's just an example. You know, I don't want to get into doing math because we don't have time today, but basically, if you could change that company-specific risk, you could see how things start to change really rapidly. Okay. Now, go ahead. Sorry. So, you know, there's always, of course, you know, in that formula, you know, if you can change the numerator or denominator, if you can increase your free cash flow, your valuation is going to go up. That's the obvious one. You can increase your profit on the bottom of the P&L, your valuation is going to go up, of course. So there's always that job of increasing the profitability of the company to get your valuation up. But if you can, like we're talking about, increase the transferability of the business, your valuation goes up. Do we have customer contracts? Do we have a diverse customer base? Do we have processes documented? Do we have people with their contracts, you know, the employees with their non-compete signed? Do we have a culture that a buyer would actually want to acquire, right? I want to jump ahead and see. Okay, good. So, you know, durability of, you jumped ahead a little bit. The durability of revenue and cash flow to fund future payments. You know, a big part of how somebody's going to acquire you typically is with debt. Every deal I've done, we've acquired companies with debt from the bank. It's a great way to do add-on acquisitions, you know, and it's cheap right now. Bank debt's cheap, so why not use their money to acquire somebody? So, but you got to understand that the buyer wants to see consistency in your cash flow and your stream of revenue and cash flow because they have to pay back the bank's debt after they fund you, you know, after they take you out. So, and basically, one of the other things I want to say on this one is going back to the regular meetings with your management team and advisors, looking at those internal risk factors you can effectuate. You know, how do I get my value up? What are the things I should be working on? If you're regular meeting with your team of advisors, whoever it might be, your attorney, your CPA, your wealth planner, insurance on the risk side, that's going to help you keep focus on all these issues. So I think that's it on my end. All right. Jeffrey, you're going to go next? Or is it you?
Yeah,
I can't keep it straight. Okay.
Who reads books here in this room? Reads books. You have time for reading? Yeah? How many have read Stephen Covey? Yeah? All right. One of the first books, I actually met Stephen Covey back in the late 80s. So I'm a huge fan. 7 Habits of Highly Effective People. Okay? So you can go to the next one.
Yeah,
Actually, next one.
Okay.
Begin with the end in mind, sharpening the saw. Remember, these are really these are buzz phrases that resonate wonderfully in my mind, and hopefully with you too. But what it gets to is growing value with a purpose. All right. How many people know what they need out of their business to transition their life? Hands. No? Okay. All right. Let me use this real quick. Russ, can you straighten that up for me? Okay. Here's the financial planner for me. All right. Let's just say you're making $400,000 a year gross and you're used to it. Okay. So if you're doing that and it's gross before taxes, all right, at the age of 59, you need $11 million of assets producing income. Adjusted for inflation and taxation, that's what you need sitting somewhere. It's either going to come from your business, sale, and or the money that you saved along the way. Make sense? Now imagine if you have two partners. Now that doubles. Now you go, okay, well, my business is making $1 million. If I got a multiple of 4, whatever, it's $4 million. How am I going to get to this or to that? It's really what we're here to talk about. Driving value exponentially. Okay, so, you know, I always say, all right, what do we need? What are the pieces that are necessary to put into your business that is going to drive value? And you got to identify it. So we had a presentation yesterday which talked about value drivers. All right, you're going to hear this continually. What are those items that are going to drive value? For the financial buyer, 1. For the strategic buyer, 2. Or at the end of the day, the bank. All right, because I know Ed Spenceley did a talk on are you bankable, are you viable? The balance sheet still needs to look the same, and the income statement still needs to look the same, whether you're going to transition internally or externally. That's the bottom line. So, you know, always, like Russell had said earlier, look at your business as if you were an investor, and ask yourself the brutal question: would I pay top dollar what I need actually to buy your business? Would I pay that money? And if not, then we have the next conversation. Okay, next. Well, let's look at the mindset of the CEO. You basically do 3 things, right? You make decisions to allocate money, people, and effort at the end of the day. Now, what tends to happen if you don't really have a great management team, or you have a management team that is not fully engaged? Where do the problems fall back to? Oh, yeah, right. That's the problem, right? Well, we're going to be talking about how do you create a culture of communication? How do you create a culture of accountability? That's what we're going to talk about. But at the end of the day, it leads to disequilibrium, right, in the organization, and burnout, most likely yours, which we want to avoid. All right, so what can we do? Go to the next slide, please.
Yes, sir.
All right, so this is just a depiction of what we would do in a system-centric company, not a people-centric company. We are made of people, but we need a structure. People call this strategic planning and execution. All right? What typically is the biggest problem is that companies will do a strategic planning session and they never look at it again, right? Because the putting out the fires is the big thing. But if you go through this effort to assess for operational efficiencies, assess for how you're going to increase sales, assess for maximizing, optimizing profit, and then you wrap that around your vision and strategy plans, and you align the company, you have the right people in the right seats, you transform it. The transformation thing is the whole thing. How does that happen? Meetings? God, I hate meetings. No, we call them accountability meetings, all right? And we'll talk about that in just a second, okay? We, in our firm, utilize a business process system called Traction. Who's heard of this? Traction. Write down the name of the book by Gino Wickman. This is probably one of the most effective systems I've ever encountered because it takes strategy and makes the rubber hit the road. Most importantly, it mercilessly or mercifully, okay, puts people in a position where they must be accountable. Okay? We have something called a level 10 meeting. Okay? That level 10 meeting happens every single week. It's 90 minutes. It's got the exact same agenda. All right? It's driven off of a strategic plan. We take 2 days to create a strategic plan that's sitting on one piece of paper. How many people have a strategic plan that's on one piece of paper that identifies their 10-year BHAG goal, their 3-year goal, and their 1-year goal? Identifies all the issues that you're going to be dealing with on a 90-day basis. So you have departmental or individual goals. How many have that?
A lot of people don't. But we essentially, the level 10 meeting, which is what this is all about, right? It basically starts with the strategic plan. We actually have placements. We are a company that is using it. We've grown from about 20 people to 40 people in about 2.5 years. We're going to double that again. That's the goal. You're going to do it organically. You're going to be strategic about it. But at the end of the day, everybody in the organization must know where we're going. What are our 3 uniques? Do we have a way of doing business? We have something called the Brendan Fender Way. You go on our website, you'll see it. Okay. What's our value proposition? Is it on the website or is it just information? It's got to be communicated. It's got to go right down into the very spirit and soul of every employee. That doesn't happen without this type process. Level 10 is called Level 10 because at the end of every meeting where we go through a scorecard and we go through what's called an IDS issue, an IDS process, 60 minutes of that 90 minutes is identifying, discussing, and solving issues. And people are accountable for it. That means you must have trust in that room because you're going to be holding people accountable. And if there are issues that are not being addressed, that's where it happens. So there's a whole trust-building process that you'll learn about in this traction book, okay? This is meant to transform your company. So when we look at the level 10, we're going to score that meeting. Was it effective or did it stink? Was it a 10 or was it an 8? You strive to get an 8 on everything. But I will tell you, in the past year and a half that we've been doing these L10 meetings, right, we have times that it's a 5. And you have to explain yourself. And Jed Grennan sitting back there, he goes, well, I thought it was an 8. But then another guy says, I thought it was a 5. Why? And you tell him. Culture of communication and trust. But guess what? We have a scorecard of about 15 items by person, by department. Jed, why isn't this being done? Jed's got to answer. But he's the founder and CEO of the business. I have every right to do it. And if you don't have that type of communication, you're not going to be able to transfer a transferable asset. It's brutal honesty. Okay. So let's move back one. So,
we're moving back?
Yes, back one.
All right.
So,
water break.
All right, so let's look at some of the things. We talked about, well, in that process, it's meant to get 3 to 10 times EBITDA improvement. These are a couple of areas that we're dealing with. Strategic marketing. Does everybody in your company know what differentiates you? Do they know it?
Yes and no.
Okay. The issue is, it may be in the CEO, it may be in the top management ranks, but nobody down below. Again, this is part of the whole idea. Putting it on your website, what differentiates you, what is your way? Everybody should be able to do that. A lot of people are putting their values and their mission statements on the back of cars. I would lobby, you put your value proposition. How are you different? Okay? Once you understand that, you can focus and align the company. How many here have built their current org chart and then what it needs to look like at double the size? Have you done that? Okay, so I got 10 people. Double the size. What does that structure look like? What are the functions of those boxes? Not the people. Don't look at the people. It means nothing. Okay. What are the functions that must be dealt with? No box has got 2 people in it. Well, that means that, geez, David, you're in this box here formally, but you're in this box over here. And that's creating confusion and no accountability, right? If we can nail down this issue of accountability, all right, and there's something called WTC in traction. Do the people want it? Okay? Okay. Do they get it? And do they have the capacity to do it? Okay? Very simple. And we grade every employee in our organization on whether they want it, they get it, they have the capacity to do it. Real simple in the book. You got a plus, a minus, or a plus minus. You get more than 2 minuses or plus minuses, you're not the right fit. Oftentimes, and that's where values and about what your values are, that's where that's so important, because you hire and fire based upon that. And people will take themselves out of the company because you're helping them see that they are not a fit because they don't have those 3 things going for them. And it's nothing personal. It's just, are you right for where we need to go at double the size in 3 years? Okay? This is what that does. Let's go back, please. Place bets on the future. Everybody in this room is placing bets, right? We don't like to take uncalculated risks. I'll share a story about my own family business and what we did. All right. Optimizing and simplifying the business. Creating leverage. What can you outsource from your own operation? What's not touching the customer? Right? In your case, it's hard because everybody has to be U.S. based and clearances and all that stuff. The thing is, though, what are things that don't have to be dealt with? The whole PEO industry, professional employer organization, it came into fruition just to take HR out, training, compliance. Well, there's a whole lot of things. I come out of a manufacturing world. Outsourcing was the name of the game. Okay? So we'll talk about that. Eliminating bad investments. Russell, okay? What's an example of bad investments you've seen and how people have just kept driving at the China egg and haven't gotten rid of them? Example.
You can do a bad acquisition that you never get the return on the cash flow, and if they put all this time and effort, sometimes you just got to shut it down. It's not going to work.
Right.
It's a big one.
How about partnerships and alliances? Right? Okay. I'll tell a story. In my family business, we were in clothing manufacturing, and we had and of course, in that world, you have to outsource everything to lower cost countries. Well, I actually lived in Eastern Europe back in the early and mid-'90s. I didn't know a soul. And we didn't have a big budget to do things, but I had to develop a national distribution for a product we had never touched before. How do you do it? Who are the people that sell different products that go to the same customer? And that's what we did. You can do the same thing. That's where alliances come into play. Okay. There's Ed Haywood from Lucas is here. About a year ago, they had done a joint venture. Right. This is all good stuff. Yeah. Thinking about joint ventures when you don't have the assets in your company to be able to provide the value proposition. Okay. Yeah. Go ahead next.
Okay.
All right. Next one. Next. Okay. So value drivers, we had talked about it. Business planning, I talked about that. I talked about exit. The business value planning, I need an $11 million business, or I need a $7 million business because I have $4 million of capital sitting over here. All right. It's great to have this, but the traction process, for example, gets you moving in that direction. All these different things. Written processes, org structure, management control, making sure that you've got a metric system there, holding people accountable. I know financial reporting is a big issue. Wayne Leland has been in the contracting space for decades. All right, share some of your own situations there, what you've seen.
Yeah, it starts with the financials. The fulfillment contract orders, you're in a unique position and a good position because a lot of it the government's already requiring you to do it. Coming to the table to sell the company. I've been on the side of it. One instance years ago where they came in and it was like about an $8 million sale that they wanted to do. Found out later after everything fell apart that the buyer was willing to offer $20 million. But they couldn't get to the financial We call them green staff, so now you gotta get enough so you can sleep at night. That part of it, yeah.
Good deal. Thank you. All right, next slide real quick.
Yep, sure thing.
Okay. All right. Obviously, when all the gears are not clanking and well oiled, obviously being on purpose gives you permission to do all of these. I'd like to write the name of another book down, okay, and it's called Halftime by Bob Buford. The reason why I say that is his whole message is moving from success to significance. So we have a financial target that we're going after. Well, really, what's my peace of mind? If you're running 1,000 miles an hour for 40 years, actually my father was in it for basically 50 years, and when we sold our business in 2003, it was a 10-year transition. He couldn't get himself in the right spot because he didn't practice it throughout. So think about your life in halftime. It could be at 30 years old. It could be at 50 or 60 years old. At the end of the day, what is it that I call, what is it that God has called you to do that you can actually do in your business and also do outside the business? Next, please. Okay. How many people have done SWOT analysis? How many have delegated SWOT analysis to individual departments or individuals? How many have actually done that process, okay, where you have 4 departments and they each do their own SWOT analysis and then aggregated all of those comments? Okay, that's a great move, right? Because once that happens, that is, again, a culture of communication which drives transformation, okay? Do the SWOT analysis by department and then aggregate their language up into your strategic plan. And you'll be amazed what the folks down at the ground level are seeing that you're not. Next. Hey, here's the basic process. You're going to gather that feedback through that exercise, and you're going to build consensus. I don't care how big your organization is. We have basically 4 departments in our organization, and everyone's got their own personality. The auditors, the tax people, the consultants, right, and the accounting people. They're all different personalities, right? But the key is help them see that you want to hear, and then basically you'll be able to exploit those things and then have a plan going forward. Next, please. All right. We're all contractors. Everybody starts in the Me Too business. How many have done, actually, before I start there, how many have done the 9-dot exercise? You know the phrase, think outside the 9 dots, or think outside the box? Has anybody done that little exercise? Okay, so let's just look at this, okay? The idea here is connect every dot by using only 4 lines. That's the idea. This is a great exercise. Have your people do it. Okay? Right. But essentially, to do this, you actually have to go outside the box. Okay? So we're going here. We got to go all the way over here. Then you go all the way over here. And then you go there. Now, why do I say that? What's visually important about being outside this box? Because when you're inside the box, you're in what I call the Me Too syndrome. Me Too. You're dealing with 5% margins, scraping by 6, 8, 6, 7% margin. Right? You're the Me Too business. Commodity. What's your differentiator? We talked about that. With this piece right here, this is where you can be unique and or uncontested. Here too. Thinking outside the box puts us in the unique and uncontested category where my unique margins are double what they are here, and over here they're 2 or 3 times what they are here. How many can get away with charging almost what they want, like Apple? How many can do that?
Apple computers, not Apple One. Okay, just making sure.
In most cases we can't because we haven't set as our charging order, okay? to actually think that way. Who is accountable in your organization to drive the value chain? Look at it. All right. I would challenge everybody. Oh, thank you. See, now I pick this up. I pick this up. I would challenge everybody to find that person who gets it, wants it, and has the capacity to do it, and have them be in charge of that. And have that as a rock, a goal every quarter of finding the thing that's going to make you unique and, more importantly, uncontested. Right. Okay? Because that affects your pricing. Oh, geez, I'm a government contractor. I'm subject to time and materials and a little bit of profit. Well, like Steve has done, he's got some diversification going. As you get bigger, you can diversify. But I would lobby, start somewhere. I'll give you an example. I said I was in the clothing business, right? Well, when we were in Eastern Europe, sourcing out of all these different factories, there came an opportunity. We started in Poland in 1984. We bought one of our factories in 1989. So we were in there. But somehow, we were introduced to a third-generation business as well that was in the cheese importing business. He was in New Jersey, about 25 miles away. Come to Poland, cheap milk, cheap everything, lots of cows. We started doing the same thing. We actually leveraged our infrastructure there, and we were doing cheese and clothing at the same time. Can you believe it? It's a Polish joke. It's a true story. But what happened? My job, I had to create a national distribution of cheese products. Parmesan, mozzarella cheese. The Poles back in the early mid-90s had no idea what it was. So I started. I couldn't do it. I didn't have a truck. We had a factory. It was exporting all that stuff. But what I did is I started saying, oh, geez, there's Gallo Wine started to do it. We actually brought a turkey producer to buy the largest turkey producer in Poland. And then we also had an American company that actually bought, a meat plant. So we started packaging cheese and all those things. And I trained their sales forces, okay, to sell our products and vice versa. So basically, within a 3-year period, we went from 0 to $10 million in revenue, which basically allowed us to sell out to a big strategic buyer. Mind you, there's a lot of stuff that happened in there. We got out with our shirts on. Fact is, if we weren't doing that and planning to be uncontested, because in this thing right here, nobody was selling mozzarella cheese or Parmesan cheese, but I couldn't get it to market, so I had to use folks like Procter & Gamble too. Oh, that's a whole story in itself. Okay? Nationwide distribution system. Use other people's access to markets to get your product in, product or service. Okay? Big deal. All right, next one, please. Okay? As you're doing this, and this is not rocket science, how am I going to increase my top line? Well, I got current products. I can sell more of those current products to the current markets, or I can basically go into some other markets. So a lot of people deal with this. You're probably doing a lot of this if you possibly can. That's product development strategy. That's new products into current markets. Or diversification is what we did. You clothes and cheese. Okay, but find out, what is it that's going to help you be different? Okay, next please. All right. It all starts with anticipating change. We're all change anticipators. We want to jump in at an opportunity. But then understanding your key resources inside the company and out. I talked about people, okay? Your organization, your people. There's an example out there. Think of a football team, right? 11 players on a side. Statistically, how many players on that team is actively engaged in your success? On the whole team. No, I'm saying if you have a team of 11, okay, how many of that 11 are actively engaged in your success? Okay, statistically 2. How many people are actively sabotaging your organization? It's 3. And then you have those who don't give a shit, who are indifferent. That's in the middle. So that
Excuse
happy
me,
middle is
sorry
the
coming
ones.
out for
The
that.
happy middle is the one that we have to affect, right? That's the happy middle we have to affect. So next slide.
Okay.
As you grow, focusing your efforts, risk reward. Make decisions as if you're selling next year. That forces you into very specific decisions. It forces everybody else into very specific decisions. Not that you're selling, but you're doing something. We talked about Me Too. We talked about the value chain. Standardize everything. Everyone in my organization is learning the Grennan Fender way, and they're learning the way we do it. The CEO Leadership Forum's approach is the same as my firm. And Perspective's approach is the same as my firm. It's all the same. We're duplicating it and replicating it with smart people so that they don't have to reinvent the wheel. Okay? Very important. Expanding into adjacent markets, we talked about that. Okay? But the big thing here is people. Man those systems. I got my expert here in Nicole McMurray, and she's going to talk a little bit about people.